Yo, Marcus Gribber here. We're going to talk about a little bit about recession and 2020 and my thoughts about that. I've been hearing a lot of chatter like recession 2020. Will there be a recession in 2020? What to do for a recession in 2020? How to prepare for a recession? What does it mean that there's a recession? I'm holding lots of cash on the side for recession. Am I going to be recession gannant in 2020? Okay, we're going to learn about that and more. But first, smash that like button. It really helps this channel out and with the YouTube algorithm, get other folks to see this content. And so appreciative if you smash that subscribe button if you haven't already. It really helps me out. And let's jump into this. So, will there be a recession in 2020? I have no idea. And I want to say one thing. There's a lot of people out there that are saying there's going to be a recession in 2020. A lot of people out there said there's going to be a recession in 2019. I personally have my opinions, and which I'll share about that, but definitely know both sides. Know why there might be a recession in 2020, know why there might not be, and why to be cautiously optimistic as well. So a few things is that when I saw that the stock market hit the 200-day moving average late last year in December, and after I saw that, I bought super heavily into the stock market in 2019, even though we had similar concerns of folks saying there's going to be a recession in 2019. And so a few things about there even being a recession in 2020. Even if there is a recession, that doesn't mean the stock market's going to crash 50%. We have to understand that. It could be the stock market might only crash 10%, or it might not even crash at all. Let's look at these other times in history where we've had a recession and the stock market wasn't impacted that much. Look at here and here as an example of a recession happening and it not tanking the market. We also need to make sure we don't fall into recency bias. Just because the stock market has crashed in 2000 and again in 2008, we don't want to have this recency bias that the stock market goes up here and it goes down. It goes up here again and then it goes down. And now it's all the way up here. So where does it go, my fourth grader? And then the fourth grader is like, down! So that's kind of like like an epitome of a recency bias. And also that helps with the fear of, oh, it's going to go down soon. But is that really the case? Let's look at before 2000s. What happened before 2000? Was there a stock market before 2000? In fact, there was a stock market before 2000. And what happened? Are we in a secular trend right now? I think we are in a secular trend. I don't think that anyone would deny that we are in a secular trend. How long do secular trends usually last? I mean, if you look at 2000 to 2013, that's 13 years where the stock market literally did nothing. You bought the stock market in 2000, and then in 2013, it's the same price. That's really crazy that there's a 13-year period the stock market really did nothing. It's almost as if you looked at it from if you backed up and looked at that whole time period, that was kind of like a bear market that whole time, a 13-year bear market. Where in history has that happened before? Well, if we look back and look at the stock market where these periods happened, secular trends generally last 15 plus years. And that's good to know. Well, what period are we right now? It depends on where you determine this secular trend starting, whether it's very common people think it started in 2013. So if 15 years after 2013, 15 plus years, we still have a lot more years to go. Now, if you start it in like 2009 or some area or the bottom, then the bottom of the last crash, then we have a few more years still to go. And so it's good to know this in history. And here's a couple areas in history where we had secular trends. So in this time period here, we had a secular trend that lasted over 15 years. And over here, we had also another secular trend that lasted over 15 years. And so these are really good things to be aware of and why they lasted this long. And would we be expecting that now? And where are we in that cycle? Are we in the middle of the cycle, in the end of the cycle? We still have a few more years. And then another point to make about being bullish on the stock market right now is that there's a whole demographic sweet spot of consumption. And where are we right now with the millennials in consumption? Well, let's first look at what happened to baby boomers and when did they pass their peak of consumption and productivity. Well, when that happened, actually, that was 2000, and then the stock market had a hard time for 13 years. So if we think that the peak of consumption and when you pass the peak of consumption can lead to trouble in the stock market, well, where are we right now? Well, the millennials right now are not even at their peak of consumption, and to be past their peak of consumption, we would have maybe 15 more years still to go to pass the peak of consumption of millennials. So there's a lot of optimism and reasons to be cautiously optimistic in the stock market right now. That doesn't mean there's going to be hardships, and it doesn't mean that there might still be recessions. But again, a recession doesn't mean that you're always going to have hardships along the way in the stock market crashing over 50% or 40%, for example. And let's go back to the population thing and some of the concerns and some of the reasons why it's a valid point here. So millennials, you have to kind of place your bets on millennials. Are they going to earn more and consume more than baby boomers? Are they going to live up to their potential, or are they going to just live with their parents and not really consume so much? Well, let's look at their college education. Actually, millennials have a lot higher of a college degree percentage than baby boomers, and that can lead to a lot higher incomes, and which could lead to a lot more consumption and productivity. So if we look at that alone, there's a lot of promise that we could have that for betting on millennials and betting on this boom of productivity and spending. So that is another reason to be bullish on the stock market right now. And it's just important, and it's important to look at both sides, the bullish side and the pessimistic side, that there's going to be a recession in 2020. And another thing that I like to look at as well is something that is in the rearview mirror, at least. Not, I don't put a lot of weight into it, but it's something that I'm paying attention to definitely, is a 10-2 yield curve. So we inverted earlier this year, and that's an indicator of a recession happening. But when does that usually determine the recession is going to happen? Usually it's 18 months. So even in that bear scenario, we still have over a year before that's going to kick in. So 2020 seems pretty good in my view. And especially since we had really good numbers recently of jobs, and the economy seems to be doing very well. And if there's a trade deal that closes in the next year or two, that's going to be huge for the stock market. And there's a lot of high potential for the stock market. And so I just want to give you the bullish case, because I hear a lot of pessimism and a lot of reasons to jump out of the stock market. And am I jumping out of the stock market? Absolutely not. Like I said, 2019 was the time where I put the most into the stock market, especially in the dips, and especially around end of May and beginning of June. That's where I put the most capital this year. It wasn't, unfortunately, in December of last year, but still, it was definitely a good opportunity, and there was many nice opportunities along the way till now. And there's still, again, I still think that we're in a secular uptrend right now, and I think we're going to be in an uptrend for the next, at least in 2020, and maybe beyond. And again, recessions can come in various forms. They can be really devastating, and the stock market crash 50% like we saw in the past. Again, let's not have recency bias. Let's be open-minded to the possibilities of that would come in the future, and even don't be so bullish. If new data comes along tomorrow or the next week that says otherwise and says you need to be more careful, we need to take the data, we need to revise what our assumptions are, and make new decisions, and plan accordingly, and reallocate capital as needed, play it day by day, week by week, and to make sure that you are ahead of the game and prepared for this. And what am I going to do differently right now? Not much. I'm going to keep investing. There's a lot of upside because of the negativity out there. That makes me a lot more interested in the stock market, honestly. If all the media was saying, oh, everyone should buy stocks right now, it's going to go up a lot, then I'd be more scared, honestly. But because the economy's been doing pretty good, and because the media is kind of negative on the stock market and kind of thinking there's a recession, and a lot of people think there's going to be a recession in 2020, that makes me more optimistic, honestly, than if that wasn't the case. So when the media starts saying that this is the greatest stock market and everyone should be invested, when that point happens, then definitely, if that ever does happen, then definitely put your warning lights on and reevaluate the situation and why that's happening. And that could be a signal for a good time to leave. And that's not financial advice, so don't get me wrong there, but that's just my personal thoughts on that, and that's what I would make me definitely think twice. And let me know what you guys think. Do you guys think a recession is going to happen in 2020? Recession 2020. Am I going to be recession going in 2020? Let me know if you guys think that there's going to be a recession in 2020, or when the next recession might happen. It's definitely a very interesting thing to think about. And does it even matter? Like, is it going to be a recession that makes the stock market go down just 10%? The stock market can crash 10%, 20% with no recession even in the mix, just like we saw in December of last year. So the stock market crashed almost practically 20%, 19 point something percent. So these things can just happen, and it's not related to the recession happening or not happening. So that's just an interesting thing to know. And even if recession does happen, if the stock's crashed already, then they might not go down further. So recessions happen, and usually the stocks crash first before the recession is even known. So then during the recession, the stocks usually start to go back up again. So it's an interesting thing to know, but it's a really hard thing to predict, and it's something that it's the best thing is just to be consistent with your allocations into the stock market, consistently invest in the stock market, know the bearish cases and the bullish cases out there, and the reasons to be cautiously optimistic. Well, I'm definitely cautiously optimistic, but I definitely have to try to check my assumptions and make sure that I'm not too biased. Really, this video, I just wanted to throw that idea out there, the reasons why to be cautiously optimistic, the reasons why we might have a lot more upside in the near future. And even though we're at all-time highs, it's hard to jump into the stock market when it's at all-time highs. But then at the same time, the stock market, more than not, is usually at all-time highs too. So it's the reason why there's a huge barrier to jump into the stock market, is the reason why there's so many people that are not even invested in the stock market. I think over 45% of individuals at this moment right now are not invested in the stock market. Around that, I think it's 56% are invested in the stock market, and many people right now, it's the sentiment that that there's going to be a recession, and then a lot of people have a huge cash pile that's on the side right now. And what does that mean? That just means that there's so much upside. All the folks that are not invested in the stock market can be invested. All the folks that have a lot of cash on the sidelines, when they get the signal that they think that the economy is doing very good, they have so much capital to add to the stock market, which gives it the upside. If everyone's bullish on the stock market and everyone's invested, the normal way it would go if everyone is bullish is down, because more people would just naturally become bearish and a regression to the mean. So if so many people are bearish on the stock market and the stock market's already really high, well, there's just more people that can end up being bullish in the stock market. I think it's really interesting, the whole, if there's a recession going to happen, when's the next huge crash? It's really interesting to think about, talk about. But practically speaking, be cautiously optimistic, keep investing. Okay, well, thank you guys for watching, and see you guys next time.